This is the Asia Trade. I'm Shery in Gyeongju, South Korea, where the APEC Leader Summit begins today with Chinese President Xi Jinping expected to speak later.
And I'm Avril in Singapore. The top stories, bond yields and the dollar higher as investors assess the Trump-Xi trade truce and lowered expectations for a December Fed cut. Meta tumbling on its AI spending plans while looking to raise $30 billion in the year's biggest high-grade bond offering. Apple gaining after the bell on predictions for blockbuster holiday sales. Amazon soaring as cloud unit revenue posts the fastest growth in almost 3 years. Plus, Marubeni CEO Masayuki Ohmoto speaks to us exclusively about the impact of trade tensions and their plans for critical minerals.
All of that being discussed here at the APEC Leaders Summit, the two-day gathering bringing together heads of states of 21 APEC economies, not to mention international organizations like the WTO and the IMF. And of course, the key question right now, will they be able to come forward with a Gyeongju declaration on free trade at a time when the international order is being questioned along with multilateralism? President Trump has already left after talks with China and South Korea. And remember, it was those talks with China that led to that one-year trade truce, although Avril, we didn't see any more details on whether he would be providing access to NVIDIA's very advanced Blackwell chips.
Yeah, and whether that even figures into the equation for sales to China. But to your point, we are, of course, coming off a week where we've gotten South Korea, Japan, new trade deals with the U.S. How does this help, perhaps, their exports to the world's largest economy, particularly when it comes to chips and autos? For the moment, we do have some data as well out of South Korea. Take a look at industrial production, because there were some expectations that the on-month figure would actually rise a touch. But for the moment, we are actually seeing that decline in terms of the South Korea numbers. And this is coming against the backdrop, of course, of that earlier expectation that chips would be quite buoyant. And note as well that when it comes to the industrial output sliding, this is following on from the estimates, and the weakness that you're seeing is actually worse than all the economists' predictions. So that's something to keep an eye on as well. Aside from some of the data points, take a look at how we are shaping up for the Asia session, because yesterday, certainly, tech was the drag, which we will get to in just a bit, just unpack those earnings out of the mega caps. But Ueda-san and the BOJ did a lot of damage to the yen. So we're sitting above the 154 handle now on dollar Japanese yen. Take a look at what we're seeing in U.S. assets, because yesterday, of course, with Meta and its spending plans, that really worried investors. It's also raising $30 billion to fund all these AI plans, but investors are not liking that. So that 11% drop that you saw in the session was the steepest in 3 years, but maybe for mega caps and the broader U.S. stock sentiment, Amazon and Apple sort of come to the rescue, right? Because we have Amazon, the cloud unit grow fastest pace in years, and then Apple, it's predicting really solid holiday spending, even though its China sales were a bit of a cause for concern. Indeed, Apple predicting that major sales surge during the holiday season on the back of its latest iPhones. That's helping assure investors that its hold on consumers remains strong. Shares higher after the bell, despite a big miss on sales out of China. Let's get to our consumer tech managing editor, Mark Gurman. So, Mark, looking at the Apple scorecard, the big thing, I guess, was what is predicting for the holiday season. How encouraging does it look to you?
Oh, it's extremely encouraging. We're talking about the biggest growth quarter for Apple in 4 years since the height of the pandemic. If they hit this 10 to 12%, which they will, that they're forecasting for the December quarter. So hugely significant. You can flush away that poor China number, that 4% annual decline, because of supply chain constraints. You can flush away the slight miss on iPhone and iPad and just focus on the 10 to 12% number, and you'll see the results. The stock is flying, and they'll probably fly again when they hit those numbers at the end of January or early February when they report the holiday period.
Any concerns about the development of artificial intelligence features at a time when, of course, there are questions about so much spending across tech companies?
Yeah, I've talked about this a lot of times on this program and others. Regular consumers don't care about AI. We're not there yet. We're still a few quarters away from them really caring. And Apple is super lucky because if consumers cared about AI and used it as a real purchase driver, you wouldn't see 10 to 12% growth in the December quarter because the AI features on the iPhone are as lackluster as they come. And so that's something that they need to fix and something they need to prepare because next year this is really going to matter, especially when you're talking about the new types of devices that Apple will be launching later in the year in 26.
Lackluster also was its performance in China. How concerning is that?
Well, they're squaring it away by saying it's because of supply constraints. They're saying they made a mistake and they started calling iPhone 16 inventory a little too early, and they were left with sort of a dry period between the launch of the 16 and the 17. And worse yet, the 17 had such strong demand that there are some supply constraints there as well. So overall, not concerned, but only for one reason, because Tim Cook said that they'll return to growth in Q1 for China. Now, if that holds, then this 4% slight dip for Q4, yesterday's news.
Consumer Tech Managing Editor Mark Gurman there with the latest on Apple, as we're also watching Netflix in the after-hour session because we're now getting news from Reuters that is actively exploring a Warner Brothers Discovery bid. We're hearing that they're bidding for the student streaming business, retaining a financial advisor and gaining access to financial information, according to the sources that spoke to Reuters. The video streaming service has hired Molly's investment bank that advised Skydance Media on a successful bid for Paramount Global to evaluate a prospective offer. According to the sources, Netflix has also granted access to the data room, which contains the financial details needed to make a bid. So again, Reuters saying that Netflix is actively exploring a bid for Warner Brothers studio and streaming business. But let's bring it back here to APEC because the dust is settling on yesterday's summit between President Trump and China's Xi Jinping. Investors and diplomats are assessing whether their one-year trade truce really resolves fundamental differences or just buys time before the next flare-up. The China Show co-anchor Yvonne Mann is here with me. And really, the APEC CEO summit dying down, but the leader summit ramping up right now. What did we get out of that conversation?
Well, what a day it was yesterday in Busan, right? We were there for the less than 2 hours that they spoke, but President Trump basically said there was a truly great meeting with President Xi. They both were shaking hands. They were smiling. They talked about, Xi felt really warm seeing him again. So certainly there was that positive tone. The optics were good. But you talk about what you said, what was actually achieved. It seems like this is not really a fundamental turning point in the relationship, right? It seems like right now we are just seeing some sort of temporary thaw and truce. 1 year, though, that is longer than the usual 90 days that we've been talking about when it comes to these truces. But it only seems to only stabilize how things are right now. So if you break it down, we talked about fentanyl tariffs, right? That's been cut in half from 20% to 10%. That's what China got out of this as well. Also, when it came down to the U.S. suspending tariffs, reciprocal tariffs on China for a year, that essentially brings tariffs to 47%, which does keep at least the manufacturing base in China competitive with some of its regional rivals. On the flip side, what did the U.S. get out of it? Well, the flow of soybeans is back from China. Also, when it came to rare earth controls, that also has been relaxed as well for a year. Besson, the Treasury Secretary, did talk to Fox Business saying that China could purchase up to 25 million annually metric tons of soybeans over the next 3 years as well. So that could be a welcome relief for a lot of U.S. farmers out there. But at the end of the day, the market was a bit disappointed. You could see, when it came to Chinese stocks, there wasn't that much breakthrough here when it came to chips, for example. So maybe that's why there's still a lot of lingering questions on really what comes next after these talks.
The Blackwell line, of course, was a key question. Will they have access to that in China, but also anything more concrete on TikTok? What was really not achieved then?
Yeah, it's interesting, right? It was so much speculation when Trump was coming over here that they were going to at least discuss the Blackwell line and opening access to that to China. But Trump said that was not discussed. In fact, they only talked about NVIDIA's other products that China could maybe get once again. So, Trump also essentially saying it's up to NVIDIA and China to sort of deal with this issue of opening up that market to the company once again. It's going to be interesting now. NVIDIA is still here, Jensen Huang, so to see what kind of reaction he has to that. Could be pretty disappointed. Also, what was not mentioned was Taiwan. U.S. did not soften their commitment to Taiwan. He mentioned that was not really an issue that was brought up as well. And when it came to oil, right, when you talk about, these recent U.S. sanctions on Moscow, Trump said he skipped the whole Russian oil discussion with China, which gives us a bit of an early glimpse of just how loosely the U.S. plans to enforce some of these sanctions on Russia when it comes to China. But I think the big thing is when it came to rare earths, right? It seems like these sweeping rare earth curbs from China is working to at least cap U.S. export curbs, right? We did also see the U.S., they also relaxed that rollout of this whole so-called 50% rule, which basically extended all these restrictions on subsidiaries of blacklisted Chinese firms. So at least there was a little bit that on the export side of things.
So focused on the Trump-Xi conversation, but there were so many other bilaterals also going on, right? I mean, we heard President Yi meeting with Prime Minister Takaichi, the first face-to-face meeting since the new Japanese Prime Minister took office. And really was interesting for me, being based in Tokyo, how they increased that relationship. They want to keep cooperating. There was a lot of questions about whether a conservative government in Japan and also President Lee Jae-myung, who has in the past criticized Tokyo for historical issues, would actually get along. But today also we have lots of bilats. We have a full APEC agenda for the next 2 days.
Yeah, now that President Trump has left South Korea, I think the spotlight goes back to Xi Jinping, right? Because he is going to be going through a few bilateral meetings later on today. You mentioned about Takaichi and Lee. Takaichi said when she came here, she wanted to have a summit with Xi Jinping. That seems to be something that is on the agenda here today. It seems like they are due for some sort of trilateral sort of meeting between Japan, South Korea, and China for some time. So maybe Takaichi could pave the way for that. Xi is also due for a state visit to Japan as well. He was supposed to go during the COVID time, but the pandemic did delay and skip that. So certainly we'll see what happens on that front as well. Also, we're expected to see Xi meet with the Prime Minister of Canada, Mark Carney, later on today too. And tomorrow, Lee Jae-myung, the South Korean president, will also meet with Xi. But before that, we're also talking about this big speech from Xi Jinping. This is part of the handover ceremony when APEC does go to China and Beijing is the host. So certainly we're looking for some sort of speech there from President Xi and what he says, maybe some reaction to that trade deal that was discussed with China.
Our co-anchor of the China show, Yvonne Man, here at the APEC CEO Summit in Gyeongju, South Korea, with me as we're actually getting a few more details when it comes to trade from Secretary Bessent, who's speaking to the press saying that they need to de-risk with China, that the U.S. has a chance to build up the rare earth industry, and they will be back at the negotiating table with Beijing in 1 year. They expect another delay with China 1 year from now. Coming up on the Asia Trade, we'll continue discussing the U.S.-China relationship with former U.S. Ambassador to China Max Baucus, weighing in on this trade truce. Plus, more from the APEC CEO Summit as Continental Resources Chairman Harold Hamm and Deloitte's Regional Chief Executive join us live. Much more ahead. This is Bloomberg.
If we continue on the current course and we don't take the growth level up, there will be a reckoning in this. And the bottom line is we have to find people, to buy and finance our debt. And, ultimately, it's not going to be other people around the world. If it keeps growing, it's going to turn to us.
Goldman Sachs Chairman and CEO David Solomon sounding a warning on U.S. debt, but the focus is squarely on U.S.-China relations. And following on from Presidents Trump and Xi agreeing to extend the tariff truce, roll back export controls, reduce other trade barriers in the landmark summit, we're since hearing from the U.S. Treasury Secretary saying that the U.S. expects to negotiate with China again in a year. So does this beg the question about everything that has been ironed out in the past day, more or less kicking things down the road. Let's discuss the market implications. Bring in Vasu Menon, Managing Director of Investment Strategy at OCBC. So, Vasu, as is quite typical with these U.S. negotiations under the Trump administration, we get a deal and then the respective parties go back and we kind of unpack the details of the deal later on. Now we are hearing that best in things, they still need to de-risk with China. I wonder, what is your read on, for market implications, were there enough in the way of surprises from the Trump-Xi meeting in order to excite market participants?
Well, if you look at how the markets perform post-meeting, the markets didn't react with excitement. It was largely priced in. I think the markets expected some kind of agreement to take place. There was enough detail to satisfy the markets, but not excite the markets and say, look, I mean, this is a strategic breakthrough. It's a tactical pause. It's not a strategic breakthrough. The fundamental differences are still there. The underlying rivalry is still there. And this could flare up once again, as you said. When they go back to Washington and Beijing, discussions take place domestically, and then, for political reasons, things could flare up once again. We've seen this happen, and I think investors are a bit wary, given what's happened historically, and they're going to give this a bit of time to play out to see whether the agreements will hold. Because if they don't hold, then, clearly that's not the best piece of news for the markets. But you sense a little bit of skepticism from investors as to whether, this agreement will completely hold. Although they're quite happy that at least, both leaders optically shook hands, looked happy, and came out with at least some details that, satisfied the markets.
To what extent, then, do you think that everything that's happened this week or this trade truce is going to be a key driver at all for Chinese stocks in particular, especially at a time when policymakers have already been trying to pivot the economy away from exports?
Well, it helps. It helps to the extent that, it helps to at least reduce tensions in the short term. Hopefully there's no flare-up anytime soon. But that aside, China just concluded its fourth plenum. We'll get more details of what they plan to do in the next 5 years, come in first quarter of next year. But I think the markets are expecting more stimulus. I think China may have been holding back for some kind of agreement before they launch more stimulus. So this expectation that the Chinese government will do more by way of stimulus to support the economy. And in China, there's lots of domestic savings. Equity participation is only, I believe, 5-6% of household wealth. If you look at China, I think it's more than just about the trade deal. I think there are other fundamental drivers in China that could actually send the stock market even higher.
China is doing so much to try to support its own economy. What about the United States? Because we didn't get that signaling from the Fed about rate cuts to come at a time when we are seeing a very narrow rally with only AI stocks gaining ground.
Well, you're right. I mean, I think one has to be careful with the AI rally. We saw what happened with some of the tech stocks last night. I think the markets are jittery. I think AI is still a super trend. It's a long-term story. Along the way, there'll be bumps and bruises. But, I think the trend is still one that's headed higher. The rest of the market could also benefit in time to come. Yes, the Fed indicated that they may not cut in December, but our view is that they will. When there is enough data that shows that the employment market is weakening, we think there'll be at least one more rate cut in December, possibly even in the first quarter of next year. So it's very data-driven. Right now, the Fed is flying in the dark. It doesn't have enough data to work on, but we think that the data generally, if you look at the trend, has been showing a weaker labor market, and the Fed has got a dual mandate. One is the labor market, the other is inflation. Inflation is not spiking, so the Fed is more focused on the labor market, and it's worried, I think, at the back of its mind that the labor market could weaken further. So when data eventually is released, I think the Fed could act.
Is that worry what's really preventing the Bank of Japan to move at this point as well? I mean, given where the Fed is projected to go and where the BOJ is projected to go, we were expecting the yen to strengthen, but in fact, we're actually seeing more and more pressure.
That's right. So I think the BOJ decision, I think, was expected. 7-2 in favor of holding rates. I think that was expected. Initial response from the yen was not spectacular. I think, it weakened slightly by 0.2% initially. It's weakened a bit more since, but I think that's because the markets have internalized and said, look, the BOJ is not hiking rates, the Fed is not cutting rates. So all in all, it's not the best piece of news for the yen. Puts the yen on the back foot. But I think, it's still possible that the BOJ could hike rates in the next one or two policy meetings. They're worried about, the downside risk to the economy. They're worried about the trade policies and the trade developments taking place globally. But we've had the Trump-Xi meeting over now, and so there's a bit more clarity. So perhaps the BOJ will act.
Whatever's come out from the BOJ and Ueda-san in the past, 24 hours has been very unhelpful for the Japanese currency. I wonder how you see the interplay for Asia's exporting economies with the yen weakness, the dollar bouncing this week as well. Not just about Japan's economy, but what is that going to mean for other export competitiveness and the rivals in Asia economies?
Well, you're right. I mean, the dollar has strengthened a little bit. The yen is weakened. Asian currencies could weaken a little bit. They have done quite well. They could weaken. But I think that's probably a temporary blip. Our view is still that the dollar could, over the next 12, 18 months, weaken further. Once Fed rate cuts take place, signs of the economy weakening kick in, I think, the dollar could still weaken, not fall off the cliff, but weaken, and, that could actually augur well for Asian currencies in time to come. For now, of course, the markets are focused on, the latest FOMC outcome and the BOJ outcome, and that doesn't augur well for Asian currencies, at least for now.
Vasu, thank you. Good to see you.
Thank you,
Vasu Menon, Managing Director at OCBC. We have more ahead on the Asia trade. This is Bloomberg. The latest from the corporate front. Meta has sold $30 billion of corporate bonds after receiving record orders for the debt. The sale is the biggest high-grade offering of its kind since 2023 and comes after CEO Mark Zuckerberg warned Meta will spend even more aggressively on AI in the coming year, sending shares tumbling 11% in New York. Nissan has warned it expects a $1.8 billion operating loss this year as it pushes ahead with a cost-cutting turnaround plan. The outlook is the Japanese car maker's first for the fiscal year ending next March after previously withholding guidance. While Nissan did trim its loss estimate for the second quarter, Bloomberg Intelligence says this is due more to one-time costs. BYD posted a 33% slump in profit as the Chinese EV giant struggles with cutthroat domestic competition, impacting its sales outlook. Overall revenue fell, missing analyst estimates, shrinking gross margins, highlighting the pressure from a prolonged price war. BYD's stalling sales saw it lose its title as China's best-selling automaker in September. And Tesla shares falling after its 10th recall of Cybertrucks in less than 2 years, and these recalls affecting over 6,000 units of the electric pickup. Something to keep an eye on. We'll have more ahead. This is Bloomberg. And we are getting numbers just crossing the terminal out of Japan. Of course, we are keeping tabs on how the economy has been shaping up, given the focus on wages following on from Ueda-san's commentary just a day ago. Not enough, he says, in the way of wage growth to, for now, warrant a rate hike. So something that is part of what market participants are watching, and we are seeing the jobless rate coming in at 2.6%. This is slightly higher than the estimate. Job to applicant ratio also in line with estimates at 1.2. But of course, as a leading indicator of nationwide trends, we have Tokyo CPI, the on-year number, as well as the core print, both coming in hotter than estimates. Similar picture when it comes to, even if you exclude fresh food and energy, all coming in at 2.8%, accelerating from the prior reading and hotter than the consensus estimates. Let's take a quick look as well at how this is playing out on dollar yen, because Ueda-san did not sound hawkish enough in the past session, so that might have disappointed some market watchers. And don't forget as well that when it comes to dollar yen, the greenback also got an assist from the Fed. So things not looking good when it comes to yen weakness for the moment. Let's take a look at how some of the markets in Asia are faring. Shery.
So, Avril, as you mentioned, you have the dollar rising to a 3-month high. So not surprising, you have the pressure on the Japanese yen and the fact that the Fed was also casting doubt on whether to expect another move in December. You do have that pressure on the Japanese currency. And this time around, though, the Bank of Japan leaving the rate unchanged. No new hints, as you mentioned, on when the next hike might come. And then you have the former BOJ Governor Haruhiko Kuroda, though, saying that the yen is likely to trade around 120 and 130 to the dollar. So he expects some strength right there. But for the moment, we continue to see the pressure. Nikkei futures pointing to the upside of 0.3% as the ASX 200 is also gaining ground. And perhaps a lot to do with that optimism that we've seen coming from the China-US negotiations, that one-year trade truce perhaps really being felt across markets. Let's discuss what's happening in this front, because we had that meeting between President Xi Jinping and President Trump. Political sweeteners, the lack of progress, though, on structural issues. Still, President Trump described this as a great meeting. Let's get an analysis now from Max Baucus. He was the former U.S. ambassador to China. Ambassador Baucus, always great to have you with us. I mean, give us your reaction first to this agreement, because it's not like we haven't heard this before. A positive tone, but when it comes to actual follow-through, not much later.
That's right. Actually, there is some good news. The good news is there's a one-year truce. Things could be worse, but at least there's a one-year truce. Essentially, it's right to withhold judgment, because we've had words before, agreements before, and they just haven't held up. I'm a little more concerned about this one, too, because President Trump is a little more whimsical than prior American presidents. So it's unclear what he's going to do. After that, he's dismantled the National Security Council in the United States. So there's much less coordination among U.S. departments, and there's really not much of a long-term strategic plan toward China, as there really should be. So we have reason to be concerned. Another real message for me out of all this is this looks like two world peers trying to figure things out together. And we are peers, the United States and China. And China showed that it's not going to back down to the United States, that China can stand toe-to-toe with the United States. And I think President Trump appreciated that. I think that he gained the respect of President Trump, that is, President Xi being strong. Because look at what Trump's done in the past. He's bullied a lot of different countries to back down. He's bullied some institutions in the United States to back down, like universities, the media, and even some companies. But President Xi has not backed down. President Xi has stood tall. And I think that President Trump respects that a lot. It's going to help, frankly, President Xi down the road, and maybe even establish a better relationship between the two presidents.
That was interesting, right? Because we have been watching President Xi Jinping really play the long game. President Trump, his negotiating style, he wants those short-term gains. Was it surprising to you then that he didn't really concede anything when it comes to the most advanced NVIDIA Blackwell chips?
I think that Trump has to be concerned about the hawks back home. There's quite a drumbeat at home that these chips, the Blackwell chips, if Trump agrees that they can be sent over to China, would cause too much consternation among the hawks of the United States. And I do, so that does not surprise me. It's interesting to me to see whether Jensen Huang can negotiate some kind of an agreement with China, because, as we know, at the summit, President Trump said, well, that's up to NVIDIA and Jensen Huang in dealing with the Chinese. So we'll see.
Ambassador, do you perhaps think that then the U.S. president, following on from his trip in Asia, runs the risk of not coming off hawkish enough on the Chinese, which is something that both sides of the aisle seem to be able to agree on?
I think there's a slight risk that he does not come across hawkish enough. Whenever there are discussions in the White House and the Oval Office about China, President Trump is usually the most dovish in the room compared with the other hawks in the room. But on the other hand, and I think some of the hawks in China see that Trump was not as strong as he otherwise could have been. But on the other hand, both China and the United States know they need each other. And there's a reason for this 1-year suspension of difficulties between the two countries. And that's because both countries want to buy time. And both countries know they need each other as they grow and as they decouple, probably even a little more, and as each country becomes a very strong economic power. We have two peers in the world today, and I think that there's some good news there. That is that each side now respects each other more.
Do you think that whatever's been achieved out of his Asia tour can be counted as a success? Because the backdrop, of course, is that he's embarked on this at a time where we're coming up to a month of a U.S. government shutdown. Does he have enough to show for all this, the U.S. president?
I think the two are unrelated. He did get some achievements, some success. You know, China did agree to buy some soybeans. I don't know how much, but they're going to buy some soybeans. In addition, China said it suspend some of its export controls on rare earths. We have to see how much that will be. So President Trump did get some success, and also the agreement on ports that helped a little bit, and also the agreement by China to try to address fentanyl. But those, you know, I don't think, as has been pointed out by many observers, there's no structural change in the relationship. It's still going to be very complex, very, very difficult. And this was basically a time for the two countries to kind of pause, you know, take a deep breath, let's see where we are, build up our own economies, and then come back hopefully in April at the next summit and maybe build on what we have.
At least after all of these tensions with China, has President Trump finally realized that he needs the help of global allies? I mean, he came into this meeting with all of these agreements with ASEAN and Japan and South Korea as well.
He knows that intellectually. That's why he was, you know, visited Malaysia, Korea, and Japan. But the question is follow-up. When he goes back home to Washington, he's back home already, you know, he faces a different reality, and it's difficult to follow through, especially with President Donald Trump. It's very difficult to follow through. But that's separate, I think, from the problems he's facing in the shutdown. I very much hope that he sits down now with the leaders in both parties in Washington to solve this shutdown, because a lot of people in America are getting hurt.
So what's next for this relationship? We've had this Trump-Xi summit. We understand that the leaders will meet again. If there are no structural changes at the moment, what's next?
Well, obviously, we don't know. First is to look at the details. You know, a lot of nice words, but let's see what the implementation is on export controls. I mean, it's almost stunning that President Trump backed off on new export controls. That's a national security issue. And it's the first time that a national security issue, export controls, has been on the table as an economic issue. That's stunning. And that's a big give by President Trump, and the gain for President Xi. No, I think, well, both sides will take advantage of this truce, the suspension of the difficulties, to try to build up their own economies, to kind of figure out what they're going to do next. But I do think that because both countries realize that neither can push the other country around, that they're going to each has a healthier respect for the other, and I think that should help. I very much hope that it does. The big unknown here is Trump's personality, because he changes his mind so quickly, and that's a concern.
Ambassador, you said earlier, noting that in this, I guess, changing relationship between the U.S. and China, that is seen as China standing tall. In your experience and engaging with China, what is your sense of the extent in which this trade war 2.0 and the changing relationship differs from the first iteration?
Well, in the first iteration, was a so-called Section 301 investigation, and alleged and enacted tariffs against China. There were significant tariffs against China, and also exacted a promise from China to buy a lot of American products, and that never materialized. But the key point here is that the big difference between Trump's first presidency and now his second presidency, and the difference is during that period of time, 6, 7, 8 years, China has begun to take Trump's measure. China has begun to understand Trump. China knows how to deal with Trump. Now, it may not always work, but China has a lot more confidence now than it did when it first dealt with Trump in Trump's first term. And the real.
How much does that matter? I mean, go ahead.
No, I was going to say, no pun intended here, but the Trump card is rare earth. Rare earth really brought Trump to the table.
I was going to ask, how much does that matter that Beijing understands President Trump? I mean, I wonder how long-lasting the changes will be when it comes to everything that he's setting up on the trade front when he's leaving in 3 years, or does the next government also follow through?
Well, we don't know. It's a lot depends on the internal politics of the United States. And so far, President Trump's got free reign. He virtually controls all 3 branches of government, even to some degree the Supreme Court. Now, there could be election changes in 2026, November midterm elections, and if either House, the Senate, or the House of Representatives turns Democrat, that's going to very dramatically change Trump's control over not only the United States, but also the world. That's a big potential watershed development.
Yeah, the most consequential relationship, arguably, that we're seeing in this day and age. Max, thank you so much for your insights. Max Baucus is former U.S. ambassador to China. We have more ahead on the Asia trade. This is Bloomberg.
Japanese trading giant Marubeni says it's on the hunt for opportunities in copper and lithium as part of a wider push to expand businesses key to the AI boom. Speaking to us exclusively on the sidelines of the APEC CEO summit here in Gyeongju, CEO Masayuki Omoto also addressed the impact of trade tensions on the company.
I guess first and foremost, our agribusiness in the U.S. is seeing a little bit of impact. The U.S. export agriculture has consists of a number of products, but soybean is a classic example where the supply has been shifted from U.S. to Brazil, pending agreement of ongoing discussion between presidential discussion today between the U.S. and China. But certainly, I guess, that shift actually has happened. So I guess increasingly each domestic consumption push is being promoted by each countries, including Japan, Southeast Asia, try to create a push for the domestic resilient economy as opposed to relying upon global supply sort of trade flow. And thirdly, higher sense of supply security to critical component. As I mentioned, copper is probably very critical element to AI and data center, and also power. Renewable power to operate a data center safely.
And you're expanding your assets when it comes to copper?
Yeah, we are expanding assets when it comes to the copper. We are in the one of the leading equity copper holder in Japan, and we are currently expanding our copper mine investment in Chile. Currently, our volume is 160,000 tons, leading to 200,000 tons in 2027.
Do you have any interest in getting into the rare earths business?
We are looking at it, and we hope to be able to capture the opportunity so long as rare earths, the demand of rare earths can sustain and continue.
Do you expect that to happen?
Lithium is certainly a very important, critical sort of material, and people really want it to have, so we hope to be able to explore the opportunity around that.
I know that you have businesses with Australia as well. Would those be the sort of partners you're looking at?
Yep. at the moment, yes. Yes. But we are globally looking at. So our operation is globally, and we operate with a mindset of where might be a best source of location. If it is Australia, then of course Australia. If it is in South America, it's a South America.
What about the United States, given, of course, that every country is trying to increase investments in the U.S.?
Of course, U.S. investment is important, and the critical mineral and critical asset, to the extent there is a good opportunity, we hope to be able to capture.
It also takes a lot of capital that you need to initially invest.
Absolutely. Hence, I guess private sector plays one role, but public sort of support and private and public collaboration is very important.
So you're talking to the Japanese government?
Of course, whenever we do investment in the critical natural resources, some sort of support from Japanese government, including Export Credit Agency and so on, is critically important.
What is the size and scope that you're thinking of?
Well, it depends upon the project and it depends upon the size of project. So, but of course, always more than $1 billion, and sometimes more than $5 billion or so.
Yen?
No, dollars.
Do you have sort of an idea of the ratio of your business that it could potentially take?
Yeah. So overall, as a Marubeni sort of strategy, we are perhaps focusing pretty much on non-resource business at the moment. And we wanted to ensure the business that capture the domestic consumption growth, higher value, and scalable sort of business model. These will be a main sort of part of our businesses, and we would think about around more than 80% capital going into this kind of stable non-resource businesses. Non-natural resource business, which is currently around 20% of our investment capital, would stay where we are. And we would operate within this sort of philosophy of how we may be able to increase our sort of foothold within natural resources, within this capital allocation.
How are you working with the new Prime Minister?
I guess she's a good leader, and everybody in Japan is embracing her strong leadership, and how push and focus on investing into what Japan does best in the world, industrial technology, lean manufacturing, so on. It's quite clear. So we hope to be able to collaborate with the Japanese government as much as possible with the view of making Japan stronger.
Marubeni President and CEO Masayuki Omoto speaking to us exclusively. And of course, we are keeping watch on the Japanese economy, and we have some data for you. After the hot Tokyo CPI numbers, we're getting industrial production for the on-month figure coming in at 2.2%. So this is a rebound from the prior reading and perhaps speaks to how are following on from the lowering of auto tariffs to 15 from 25%. That's something that's encouraged automakers to ramp up output. And of course, this number coming at 2.2 is hotter than the consensus estimate. In terms of retail sales on the on-month figure, it is a bit softer than the 0.8% that economists had been expecting. Though when you look at dollar yen and the climb down, that is the knee-jerk reaction to the hotter than expected Tokyo CPI. We have more ahead on the Asia trade. This is Bloomberg.
Australian banking shares could face a reckoning as lenders unveil earnings starting next week, with valuations setting a high bar for results. Let's go to Sydney and bring in our Australian New Zealand stocks reporter, Carmeli Argana. Carmeli, so what explains the high premiums that we're seeing in Australia's banking sector this year?
Yes, so this is the question that is constantly confusing analysts whenever I'm having this conversation with them. What exactly makes Australian banks so expensive? Well, one of the answers to that could be the defensive reputation that the sector has amid periods of volatility, as we've seen in markets this year with the trade war. Now, the sector here is very retail heavy. A lot of those profit streams are coming from the domestic customer. So investors that are looking for exposure to Australia's relatively stable and resilient economy will be looking to invest in the banks. So that sort of explains the strong rally in the prices that we've seen so far, and therefore why we keep seeing those valuations push higher and higher.
Carmeli, on the economic outlook, we had inflation numbers that were hotter than expected earlier this week. Next week, we have an RBA decision. How is this backdrop going to affect the banks?
Yeah, so the banks are very sensitive to the economic backdrop. As I was saying, they're very much tied to the health of the economy. They benefit when inflation is coming down, when rates are coming down. But on the other hand, having lower interest rates actually cuts into their margins. So it's a bit of a double-edged sword there. As you mentioned, we just had hotter than expected inflation data earlier this week. If you look at the share reaction of the banks that day, they actually went down quite a bit. As that inflation sort of signaled alarm bells for the health of the economy. But looking in the short to medium term, having higher inflation means the RBA is probably going to push back their next rate cut, which means that those margins will stay intact for a bit longer. So it's sort of that double-edged sword for the banks.
Just really quickly, we saw in the August reporting period the risks of companies missing expectations. What can we expect this time? Super quickly.
Yeah, so, I mean, it's definitely still a risk. I would argue it's even higher because the banks are so expensive. As an example, we saw in CBA in the August reporting period, even though the results were mostly in line, there was still a sharp reaction in the price because there was sort of waning confidence as to the ongoing growth and profit outlook for that stock. So it's definitely still a risk this time around.
Carmeli, great to get your insights on this as we watch for some of these bank earnings. Bloomberg Australia and New Zealand stocks reporter Carmeli Argana for us. We have more lined up for you from the APEC summit. Don't miss that. We'll watch the markets open next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And of course, Shery, there's still some excitement ramping up with the Gyeongju event. But of course, this is coming off a week where we have trade deals that the U.S. inked with Japan, South Korea, and then we have markets now digesting whatever's come out of Japan in terms of economic data.
Are we going to get that Gyeongju declaration is a key question, right? Because we are seeing these questions about multilateralism, questions about where the international order goes from here. But at least when it came to that U.S.-China trade truce, 1 year, and we will be watching those soybean purchases, not to mention, of course, cooperation when it comes to fentanyl tariffs as well.
And then not forgetting what we got from the central banks this week, particularly when it comes to the BOJ. The Ueda-san certainly did not sound hawkish enough. There was a lot of damage inflicted on the Japanese yen. And then we also saw from the board in terms of dissenters, a same number as at the last meeting. And importantly, the BOJ also talking about how it expects inflation to cool next year. So all in, this is the read-through you're seeing across Japanese markets. But perhaps, given the weakness of the yen, despite a bit of a pullback on dollar yen following the hot Tokyo CPI numbers, that the weakness there is helping Japanese stocks. Now, flip the board. When it comes to equities, we're also seeing South Korea stocks. In the past few days, it's really been supported by chip-related names. So you're seeing a bit of wavering for the moment. Quick look as well at what we're seeing in the U.S. because we've gotten these mega cap earnings, right? And Meta was a cause for concern, but Apple and Amazon, they seem to be helping to reverse some of those worries when it comes to the big tech names. We are seeing, of course, markets still trying to ascertain what we'll get from the Federal Reserve come December. That is a lot to unpack. Let's bring in Bloomberg MLive strategist Mark Cranfield. So, Mark, I think the key thing on your radar is in the past, 36 hours or so, the central bank decisions and their commentary and the damage that's inflicted on the Japanese yen. How much trouble is it in?
A lot. Unfortunately, Governor Ueda didn't really help the situation at all when he came into the press conference. The Bank of Japan had already left rates unchanged earlier in the day. And when you see the data, which has just fallen out this morning, and they probably had that data in their hands before they made a decision yesterday, it looks a bit strange that you wouldn't even point towards interest rate hikes more decisively than they did. So it was a relatively dovish statement, as you were saying. They talk about inflation coming down in the first part of next year. And yet today we've just had Tokyo CPI, the core number especially, much higher than expected, quickly followed by industrial production numbers, which are relatively strong considering the situation going on in Japan. They would have known that, and yet there was only 2 dissenters at the BOJ. And then when it came to the press conference, Governor Ueda really dialed back on the wages. He previously been saying that wages had pretty much reached a level which was inflationary, sustainable, and now he's saying he needs a lot more time to assess that. FX traders read it straight away as him being political, but he was more worried about how Prime Minister Takaishi would feel about his decision. Dollar yen goes higher. We've seen a little dip this morning based on the data we've seen. It is probably not going to sustain when you consider that US yields have gone higher as well. That supports the US dollar. And people really don't have much faith that the Bank of Japan can actually get over the line and deliver an interest rate hike in December. At the moment, it's just a coin toss. People are not very convinced. It would need a big change in the narrative from the BOJ speakers between now and December to really convince traders that they are behind the yen and they're going to raise interest rates to defend the currency.
Okay, on top of what we're seeing from the BOJ, it's also about these Mag 7 earnings. We've gotten a few. They're telling us mixed signals. I asked you this yesterday. How supportive is it of valuations? Do we have more support now for where AI stocks are trading?
I think the underlying message is that the big investments in the AI networks, the data centers, that kind of thing, are beginning to pay off. I think that's the bottom line. There's some noise on the surface, particularly when you look at Meta. They came off very hard yesterday because they overspent in certain areas and had write-offs. But the underlying picture, particularly from Amazon and Apple, is that AI is working. Now, we've got to wait for NVIDIA. But then if you look at what's happened with Samsung, with SK Hynix, with TSMC, all of that is pointing to probably a good picture from NVIDIA when they report in a few weeks' time. So there'll be some noise because markets were at extremely high levels, valuations were very rich, but probably we're going to get a reinforcement that the AI story is good and sustainable into 2026.
And we'll also be watching out for the knock-on effects, I guess, from Apple's scorecard and the Apple suppliers and how they're faring in the region. Bloomberg MLive strategist Mark Cranfield always get your analysis. Shery?
Right, Avril, let's turn to oil because giant Shell has beaten estimates on profit and maintained share buybacks while paying down debt, showing its resilience to weaker oil prices. The third quarter performance was helped by stronger oil and gas trading, a vital part of the business that struggled earlier in the year amid geopolitical volatility. In fact, the rest of the world's biggest oil companies are expected to press ahead with plans to accelerate production growth when they record earnings over the next week. The increases appear designed to capitalize on an expected oil price upturn in the latter half of next year, but that could add to short-term glut pressures. Let's discuss the state of the oil market and bring in Harold Hamm, founder and chairman of Continental Resources, the largest privately held energy producer in the U.S. Harold, really good to see you here in Gyeongju, South Korea.
Well, it's good to be here. Thank you.
Tell us a little bit about what you expect from oil demand, because it's surprising how prices are still under pressure, but people continue to produce.
Well, first of all, horizontal drilling has given the entire world cheaper prices for both oil and gas. So the energy renaissance that horizontal drilling brought about was fantastic, has done its job. But, you know, there's a couple clouds on the horizon, perhaps, and crude oil is one of those. You know, we're seeing decreasing amount of the ability to overproduce, overcapacity. That has went on from as much as 65%, as I remember in the 80s, down to 2014 it was 15%. Right now it's about 2%. Using 106 million barrels a day, and we've got 2% overcapacity in the world. So where's that dwindle out and where's it run out? And we're able to see far enough ahead in the third quarter of 2027. We believe that gets very narrow, and we actually cross over that demand curve. So demand becomes more than supply at that point.
Okay.
So that's a problem.
Could the demand picture improve now that we have less trade tensions, or at least some more optimism when it comes to global relationships right now over trade?
Yes. So I think that we're seeing a couple things as people prepare for this going forward. For instance, China is establishing a whole lot of storage. They're 1.1 billion barrels of storage, going to 1.5. And so as cheap oil still exists, and oil is cheap, $60 a barrel is very cheap. And so they're taking advantage of that cheap price with storage, and the U.S. is beginning to follow suit and fill their storage back.
And that sort of energy security is very important, and you've been advocating about that to President Trump. Have you seen him this time around here in South Korea?
I wasn't in any of the meetings that he attended here in South Korea, but I'm glad he's had those. And, I know he reached out to North Korea, President Kim as well. But
they reached out separately.
They reached out, but he couldn't attend. So that would have been good if that could have happened, of course. But it didn't. But anyway, it was a very successful meeting, I think, with he and President Xi from China, even just reestablishing a bond to start up again. So that needed to be done. So I think it's a very successful trip for the president.
How do you think this will play in the U.S.?
Well, I think that'll play out very well in the U.S. Everyone would like to see this tariff situation resolved. And this is a good step in order to do that.
We still have those tariffs when it comes to metals, which increases costs for energy producers. Is this still a concern?
It's not as big a concern. I talked about what our company did on Bloomberg about 2 years ago almost. We realized that how much of our supply chain had been outsourced to China, and basically I said no more. We're going to bring it back, to America, and so we've begun to do that, and we swapped it around from 90% outsourced to now we're at 92% and basically in America. So it's been a big turnaround for Continental Resources. So it can be done. And, we were seeing these companies take advantage of cheap labor in other countries, but it wasn't being manifested to Continental. Well cost was still the same. Somebody else was making a profit on cheap labor. It certainly wasn't Continental. And so anyway, bringing it back onshore to the U.S. is what we've been able to do, and it's been a great thing for the company and also for vendors.
How much oil demand and energy demand do you expect from the fact that we're seeing this incredible AI boom and the build-out of computing infrastructure everywhere in the world right now?
Well, it's a tremendous amount, and that is a preferred fuel of choice by AI, and I can understand where that it would be. First of all, clean burning fuel, using just the transition from coal to natural gas has lowered emissions in the U.S. about 40%. So it's been drastic over the last decade. And so I can see where that would be the fuel of choice. It's immediate, and it's constant, and it's always there, reliable. And it's not only 24/7, it's 365 year over year. So it's a good thing for the industry as well. And we haven't seen prices spike over it. You know, it's still cheap fuel.
Do you expect there to be some risk with the AI build-out that we're seeing right now if the benefits don't really materialize fast enough?
Well, I'm not busy. I don't work on that end of it.
But you have to set up the energy infrastructure in your company in order to be able to provide the resources.
Yes, we're responding to the need in our company with power generation and making sure that we can deliver the fuel. So yes, that's happening. But I am excited though from the example I give you is diabetes research. What can the benefits of AI do there?
Right.
Can we cure diabetes? Can it move us that next step closer to that cure? We're very close already. Yeah. People used to didn't even think it was possible.
Yeah.
I not only believe it's possible, I think it'll happen next decade.
The medical benefits could be amazing. Harold Hamm, really good to have you here and meet you in person in Gyeongju, Chairman of Continental Resources. Thank you.
Thank you. Good to be here.
And Shery, of course, we are also unpacking what we're seeing in auto stocks. I mean, you're at that event. We did get Japan coming away with still those tariffs lower than had been threatened earlier in the year. But the other driver when it comes to Japanese auto stocks for the moment, if you look at Nissan, as the company tries to engage in a turnaround, we are seeing that shares of Nissan are falling after warning of a $1.8 billion loss. For Toyota, it has recalled more than 1 million vehicles. So that's something else that might be playing out in the session, looking a bit soft. Honda earnings are also due. So automakers, on top of some of the other Japanese names, including the suppliers of Apple, are the movers that we're going to be watching in the session today. More ahead on the Asia trade. This is Bloomberg.
Take a look at live pictures here from Gyeongju, South Korea, where the APEC Leaders Summit is getting underway. It's a 2-day summit, and we had just seen the host of the APEC Summit this year, President Lee Jae-myung, waiting for the leaders to show up for that famous family photo when it comes to APEC. This afternoon, we are expecting President Xi Jinping to speak. We are also expecting a few bilaterals, including President Xi Jinping and Mark Carney. Tomorrow, we have President Lee Jae-myung speaking to President Xi himself. Will we see a Gyeongju declaration is a key question because they are trying to reach consensus when it comes to the international order and, of course, questions about multilateralism as well. You can see there President Lee Jae-myung standing here in Gyeongju, South Korea, waiting for other leaders for the APEC family photo at a time. When President Trump is already gone, he's skipping the Leaders Summit. He left after talks with China and South Korea. Let's actually discuss all of this with Chinese economy and government reporter James Mager, who joins me here in the Gyeongju Art Center as we await that family photo. James, let's talk a little bit about what we got so far, especially from that Trump-Xi meeting.
I think my takeaway, and also it seems like the markets as well, the takeaway is that it wasn't a massive step forward for U.S.-China relations. There was a lot of disappointment in markets yesterday about what has actually been agreed. And I think if you look at the details, it's really a return to the status quo ante in, say, March this year. The U.S. has rolled back on some export controls. China has suspended some export controls. China is going to buy some more soybeans, though actually not that much as they purchased last year, for example. And tariffs are being suspended. Some tariffs are being suspended, but tariffs on Chinese products are still much, much higher than they were in January this year, and they're still higher than they are on many other Asian countries, or all other Asian countries, I think. And so, some of the things that the two sides were brandishing each other or imposing on each other have been rolled back or suspended. But what we have now is basically the two sides have kind of kind of decided to stop fighting or stop adding to the weapons they have for a year. And if that holds, which there's no guarantee that that kind of truce will hold, maybe we'll see some stability for another year. But it really, compared to where trade or relations were in 2024 or 2020, it's still much more tense, and there's much more barriers to trade and barriers for investment than there were. Especially
given that we did get some of those changes when it comes to the low-hanging fruits. You mentioned tariffs, some of them being lowered. I think the overall tariff on China, according to President Trump, went from 57% to 47%. But we didn't necessarily get that many details when it came to what happens on structural issues, on semiconductors, on rare earths. In fact, I think President Trump also didn't necessarily promise any access to NVIDIA's Blackwell chips.
Right. I mean, on U.S. export controls, there hasn't been any sort of rollback on as you say, on NVIDIA chips, on AI, various AI chips. There's very little clarity on. The U.S. is still trying to reduce the trade deficit with China. How is that going to happen? Is that still a policy objective of the U.S.? There was a pause taken on shipbuilding fees, so on fees on Chinese ships and U.S. ships. But Jameson Greer, speaking after President Trump, said that the U.S. is still planning to rebuild its own shipbuilding industry and is getting billions of dollars of investment from South Korea to do that. And so the U.S. aim is still to shut Chinese-built ships out of its market and to replace those with American-built ships. So some of these things are suspended, but there is still a lack of clarity on a lot of the issues that we've seen.
We continue to watch President Lee Jae-myung waiting for other leaders to come forward for that famous family photo that we always expect at APEC. President Trump has already left, and he had talks with President Lee Jae-myung right there. James, what was also interesting was that when it came to South Korea, it seems that Seoul got concessions on that nuclear-powered submarine at the American shipyards. Why is this significant?
Well, I think it was a really successful summit for President Lee, not just because it was, the summit itself has been held successfully, but they were able to secure real concessions from the Americans. The South Korean officials who were briefing about the trade deal said everything Japan got, we got, and then we got more. So, the South Korean officials are very, they seem to be quite happy with the deal they were able to secure with the U.S. on trade and investment. And then they've also got this agreement from President Trump that they can start to build nuclear-powered submarines. What President Trump has tweeted is that those submarines are going to be built at a Korean shipyard in America, which right at the moment means the Philly shipyard, which is owned by Hanwha Ocean now. And the South Korean military is saying 4 to 5 years to build one of these submarines. So we'll see how long that takes. But that is a really important deal, and it really does allow South Korea. It really does allow South Korea to have a new nuclear capability that it has been trying to get for years. And the other thing I really thought was interesting was that Mark Carney yesterday went to a South Korean shipyard and toured a South Korean submarine. And I think we're going to see in the next year Canada announcing. Well, we're going to see Canada announcing a submarine deal, and it's looking more likely that's going to be a South Korean submarine.
And the first leader to arrive at the venue right now, as you saw, was the IMF Managing Director, Kristalina Georgieva, who just greeted President Lee Jae-myung and just left the venue as he awaits for other leaders to show up. Of course, we have the IMF, we have other international organizations like the World Trade Organization also here in Gyeongju, South Korea for the APEC Leaders Summit. But James, you were talking about that relationship between South Korea and the U.S. and the deal that was struck and how it was really measuring up to Japan, right? South Korea and Japan's relationship has also been in focus, especially with the new conservative government in Tokyo.
Right, and some of the expectation for Takaichi-san coming into power was that she was going to be much more hawkish. She might visit Yasukuni. She said she was going to visit Yasukuni. She has not done that. And in her opening remarks after she became Prime Minister, she was very, very friendly towards South Korea. It was a sort of a personal gesture. She said, I love Korean beauty products. I'm a huge fan of Korean seaweed. And, the meeting that she and President Lee had yesterday seemed to have gone off really well. It was 40 minutes long, which is double the amount of time there was allotted to it. And, one of the things I think has been really surprising in the last 5 years has been the improvement in South Korea-Japan relations, and that's been in the previous two governments. You have a conservative government. The government before that in South Korea was a left-wing government. But over that period of time, you've seen a real closeness and a rebuilding of ties between Japan and South Korea after a bunch of historical issues had really derailed ties. And Prime Minister Takaichi and President Lee, at least in their first meeting, seem to be wanting to propel that forward and to sort of maintain the gains that they've got. And so I think that's really important, both for the two countries, but also the U.S. has been, both Japan and South Korea are U.S. allies, and the U.S. has been trying to push these two of its allies closer together for years, and it seems like that strategy is finally bearing fruit.
Senior Chinese economy and government reporter James Mager here with the latest on how the APEC summit is going as we continue to watch President Lee Jae-myung greet leaders arriving at the Gyeongju, South Korea venue. We are expecting that family photo to take place anytime now. More ahead on the Asia trade. This is Bloomberg. But we're taking you to live pictures here in Gyeongju, South Korea, where President Lee Jae-myung is awaiting global leaders of 21 economies and international organizations for that very famous APEC family photo. Of course, President Trump will not be in the photo. He's already left. He skipped the leaders' summit after talks with China and South Korea. We are expecting to see whether or not we do get that Gyeongju declaration and to what extent the leaders can actually reach some agreement on charting the path for international trade, the international order, of course, and multilateralism being questioned at this point. The South Korean foreign minister has already said that the forum is very close to adopting a joint declaration. You can see live pictures of President Lee Jae-myung waiting for the leaders to come take that photo. We had just seen the IMF managing director, Kristalina Georgieva, already show up at the venue. President Lee, of course, is acting in his capacity as APEC chair. More ahead on the Asia trade. This is Bloomberg. We're live in Gyeongju, South Korea, where the APEC Leader Summit is getting underway. We just had the Secretary of the U.S. Treasury, Scott Bessent, really saying hello to President Lee Jae-myung, who's awaiting leaders in order to take that family photo. Remember, that relationship between the U.S. and South Korea improving after that finalization of that trade deal and agreements on that $350 billion U.S. dollar investment fund. Right now, we are expecting leaders to continue to make their way for the family photo, but the APEC CEO summit, on the other hand, is drawing to a close. The focus was really on regional cooperation and, of course, the role of AI. Later today, we'll hear from NVIDIA CEO Jensen Huang as well as Citi CEO Jane Fraser. Let's wrap up the key takeaways from these conversations and bring in David Hill, Asia Pacific CEO at Deloitte. David, great to have you with us. And I know that the CEO summit is drawing to a close, but it must have been pretty exciting right now when we're seeing so much exuberance around anything and everything related to artificial intelligence.
Yeah, it was amazing, actually. The focus, everything's on AI. In our recent survey that we actually launched here at the summit, it was remarkable to see that more than 50% of CEOs across the region are boosting their investment in AI. And contrary to this view that there's a bubble, over 60% said they're already seeing the benefits.
What are the biggest issues top of mind for CEOs? You mentioned AI, but it's not just about the exuberance, it's also about how to reskill their workers as well.
Sure, absolutely. This concept of a hybrid workforce, what is uniquely human, those creative attributes blended with AI agents. So the workforce of the future is a massive issue. AI fluency for our people and learning to work side by side with AI agents.
Do they expect economic growth and productivity from these changes? What are their top-of-mind priorities as they change their business structures?
Yeah. Look, everyone's looking for the productivity dividend. We haven't seen it yet, but that's often the way. You know, early adoption, there is always some sort of a trough of disillusionment, and then we get into the age of enlightenment where there's real productivity benefits. It was the same with the PC, same with the internet, and it will be exactly the same with AI.
How do they feel about the business outlook now that we have some of those trade tensions dying down?
Yeah, I think that's the sentiment. It's starting to sort of reach a level. We saw that in Malaysia, we saw that in Japan, we've seen that now here at this summit between China and the US. CEOs love certainty, and there is now a lot more certainty starting to come through. Our survey, which we launched here, said that the primary objective of more than 50% of the CEOs was growth. And that's a really positive sign, getting back to growth.
And for our viewers, you're watching live pictures here in Gyeongju as President Lee Jae-myung, the host of this year's APEC summit, is greeting all of the leaders, making their way for that family photo that will happen anytime now. But in my conversation with David, I also want to ask about the geopolitical tensions that we've seen so far and perhaps the change that you might have felt from CEOs thinking just from a few months ago.
Without a doubt, you know, for Xi Jinping and Trump to meet here at this summit is extraordinary. You know, that was uncertain only months ago. And look, it's really probably a one-year truce is how I describe it between China and the US. But some significant things, particularly for President Trump's voter base, you know, China increasing their imports of US soybeans, that's fantastic. On the other side, China relaxing those restrictions on the rare earth minerals. So really, really important, a sign, hopefully, that portends well for the future.
How do you advise as business leaders to stay nimble at a time when the geopolitics is so unpredictable?
This is the question for a CEO of our time. We refer to it at Deloitte as expansive resilience, turning volatility and uncertainty into opportunity and advantage. And that absolutely comes down to agility, adaptability. It really goes right back to Darwinian concepts. Survival of the fittest is all about adaptability.
You can see right now the Philippine President Marcos Jr. now saying hello to President Lee Jae-myung as we await that family photo to take place here in Gyeongju, South Korea, as the Leaders Summit is now getting underway, the start of 2 days of gatherings, bilateral conversations to be had. I believe President Lee is meeting with the Philippine President later this afternoon. David, of course, as we continue to see these conversations between governance and business leaders, any takeaways for you on some of the changes that we're seeing in trend in the business climate globally?
One of the things that I was really heartened by was the focus of CEOs on sustainability. Over half said they're boosting their investments in sustainability. That's really important because we all know the nexus between AI, use of electricity, use of water, and sustainability impacts. I was very heartened to see that CEOs are boosting their investment in AI for productivity benefits, but also backing that up with an investment in sustainability. I think for us as human beings, in the future of the world, that was really wonderful to see.
That is interesting because you would think with the ongoing AI boom that sustainability would sort of fall by the wayside, especially when you have a Trump administration that really wants drill, baby, drill sort of a trend. Yeah. Why do you think that's the case?
Well, it does vary by geography in our analysis. If you look at the APEC economies, Latin America's focus on sustainability was the highest, followed by Northeast Asia, followed by Southeast Asia, followed by North America. What that says to me is that Asia is looking to press home their advantage. You think about China today, all of the renewable energy inputs are really coming out of China, and they're leading on EVs, wind, solar, batteries. So I think it's Asia saying, hey, maybe this is our time to move ahead in some of these areas.
We are expecting President Xi Jinping's speech also later this morning. We had, of course, heard from President Trump yesterday. President Xi Jinping met with President Trump and had those conversations that led to a one-year trade truce between the two countries. David, will this sort of change also the tone when it comes to business leaders being a bit more confident in the year forward?
Definitely. Investment follows certainty. And even though it's more like a one-year rolling arrangement, President Trump was very positive that he felt that it would extend well beyond a year. We've seen that sort of drop in the tariffs on China. It's still very high at 47%, but a reduction there. And so that provides certainty for CEOs in terms of the allocation of capital, where they look to expand globally, because our survey showed that, again, over 50% of CEOs see access to capital improving. That will generate a lot of M&A activity. And really, when you're looking at M&A, it's all about finding the highest return on investment. And a more stable geopolitical frame provides a wonderful foundation for that.
Any concerns about stretched valuations at this point? Because we have seen many businesses actually go to record highs when there's this exuberance in the stock markets as well.
Yeah, look, this question of a bubble, some of the valuations are extraordinary. And I think when we look back at sort of Internet 1.0, Internet 2.0, there was a correction. Whether we'll see that today, I don't know. I'd love to be able to predict the future. If I had a crystal ball, I'd be a lot wealthier than I am. But to me, the productivity benefits will come from AI. You see the extraordinary, take semiconductors. The demand is extraordinary. Data centers, extraordinary. And there is a revenue model that's backing that up. So to me, I think we'll still continue to see capital growth. And there's so much capital going into that tech, media and telco sector.
David Hill, really good to have you with us. Asia Pacific CEO at Deloitte here with the sentiment among business leaders as we continue to watch day one of the APEC Leaders Summit. And you can see there Chris Luxon of New Zealand shaking the hand of President Lee Jae-myung, who's still waiting for all of the global leaders to appear for that family photo for APEC, Avril.
Yeah, and on top of that, Shery, we are also digesting the data that's been coming out of Japan today. We did get Tokyo CPI numbers that were hotter than expected. So faster inflation in Tokyo that could support the BOJ's rate hike case. That's been lifting the yen. But of course, put this together with a BOJ that did not seem hawkish enough yesterday. We also had industrial production. Those numbers showed that chip making machines, AI demand, that's all being supported. And output for cars, related parts as well, following lower U.S. tariffs, also contributing. But do we, in a way, disregard this, given what we got from the BOJ? Governor Kazuo Ueda did speak about the decision to keep rates steady after the market close on Thursday.
We held today as we want to see more data on domestic wage-setting behaviors. While uncertainty remains high in overseas economies, if we're convinced, we'll adjust rates regardless of the political situation.
Let's bring in economy and government editor Brian Fowler. So, Brian, it's interesting, right? Because now you have the data that backs the case for the BOJ's rate hiking. But given what we heard in the BOJ's messaging, what do we make of this?
Yeah, I think that's definitely, you summed it up pretty precisely there. So today's data were ahead of consensus, both for the CPI and IP. The Tokyo CPI at 2.8% was well ahead of consensus and would definitely back the case for a rate hike. And I think that's why we saw the yen rise right after those figures came out. IP also was better than we thought. And the forecast going into the next quarter also didn't look too bad. So, yeah, that also bodes well for the BOJ. Could put that against the backdrop of what Governor Ueda said yesterday, and I think it's still a little bit unclear. We spoke to economists, and some definitely said that today's data would give the green flag for a hike, while others said, hang on a little bit. We've got 7 weeks until the next decision. A lot of things can happen. I would just point out that Ueda stressed wages yesterday. He wants to see how that trajectory goes as we get closer to annual wage negotiations led by Rengo. Rengo has already put out its own idea of what it wants to get in the next negotiations. It wants wages above 5% growth. Once again, that would be the 3rd straight year. But I think we're still waiting to see what the corporations say. And we should start to see in the next few weeks some sort of pledges from companies regarding what they plan to do with wage hikes in the coming year.
Brian, we just saw new Prime Minister Sanae Takaichi there showing up at the APEC Leaders Summit and shaking the hands of President Lee Jae-myung. Of course, she's known to really want loose monetary policy, but at the same time, we know that the environment has changed for the Bank of Japan. What are we expecting to be the rate trajectory from here, especially when we have even Washington, U.S. officials weighing in on currency volatility and even where the BOJ should go?
It's going to be very interesting to watch how this plays out. So far, Prime Minister Takaichi has sought to sort of address the symptoms of inflation rather than the cause. She's talked a lot about fiscal steps that she can use to sort of mitigate that impact from inflation on households in the form of subsidies and other steps, taxes, possible tax cuts. And she has in the past spoken about rate hikes, I should say, and said it would be stupid to hike rates. That was about a year ago when she said that. She also is very well aware now of inflation and how rising voter discontent over soaring living costs led to a couple of major setbacks for the LDP over the last year. And that's why she's having to govern now without a majority in either House of Parliament. So she may have a different tack. We haven't really seen her come out talking exactly about rate hikes lately. So it's in her interest, actually, to see inflation calm down a little bit. But we still need to wait and see what she has to say about that.
North Asia Economy and Government Editor Brian Fowler there with everything on the Japanese economy as we continue to watch 21 economies across Asia Pacific gathering here in Gyeongju for the APEC Leaders Summit. President Lee Jae-myung shaking the hands of all these business leaders, of all these global leaders, heads of states, not to mention leaders of international organizations as well. We just had also the Malaysian Prime Minister Anwar Ibrahim shaking the hand of President Lee Jae-myung as we're awaiting Southeast Asian leaders to make their way as well for that family photo that's expected to happen anytime now. President Xi Jinping is also speaking today to APEC and the 21 leaders gathered in Gyeongju, South Korea, while we're also waiting to see whether or not we get a joint declaration from the heads of states. We have more ahead on the Asia trade. This is Bloomberg.
Chinese EV giant BYD reported a 33% slump in quarterly profit as intensifying domestic competition and growing industry scrutiny pile pressure on its sales outlook. Our China correspondent Min Lo joins us now from Hong Kong for more on this. So, Min, BYD has had quite a ride from at one point surpassing Tesla when it came to sales. Now we're getting another disappointing report card for the EV giant. What's the latest?
Yes, its sales has surpassed Tesla, but still it's the net income that is really the concern here because that's a 33% fall, following on from about a 30% fall in net income in the second quarter as well. Sales on the third quarter was down 3%. Vehicle deliveries was down 1.8% on year. And this is really because of the domestic competition, right? Those steep price discounts really hurting margins. It's now standing at about 17% when it comes to margins, slightly less than what it was a year ago, but slightly better than the previous quarter. The only bright spot now is its overseas push, because BYD's overseas sales was up 160%. It's doing very well in the EU, in the UK. We're looking at about a 6-fold gain in sales last month on year in the UK. In Japan as well, BYD just launched its first Mini K car, its 5th product launch in Japan, trying to break into this notoriously difficult market, and that's a product that's expected to do better than some of its earlier launches so far. So yes, the overseas sales really doing very well, but still not enough to offset the weakness in the domestic demand.
So what can BYD do? How can it recover from this domestic slump?
Well, its fourth quarter outlook is expected to pick up a little bit, because consumers in China could be front-loading purchases to make use of those subsidies that could end by the end of the year. So the question then is, next year, its sales could be in focus as well. But many analysts are saying that a part of the reason why we are seeing the weak sales in the third quarter is also because BYD has been destocking its existing inventory as it looks toward new product launches in 2026. So any tech upgrade, any new product mix, that could help to boost its 2026 sales. But again, overseas expansion, they're going to be continuing to be very aggressive on that front, especially in Japan, looking to open up 100 locations in its dealership network. So that is going to help it gain a little bit more of that profit margin that it can't get from the domestic market.
Bloomberg China correspondent Min Lo there with the latest on BYD. We're also watching here Apple suppliers in Taiwan and China at the open after the company predicted a bumper holiday sales season on the back of its latest iPhones that helped shares gain after the bell, despite a big miss on sales out of China. Let's get to our consumer tech managing editor, Mark Gurman. Mark, what were the key takeaways here?
Key takeaway is obviously the guidance, 10 to 12% year-over-year growth for the December quarter, which puts them anywhere between 135 billion and 140 billion for that holiday period that we've just started at the beginning of October, end of September. Big miss in China. They're off by about 2 billion to Wall Street expectations, down about 4% year-over-year. But Apple is saying this is because of supply chain constraints, so we'll take their word for it, and that they're expecting growth in Q1 for the Greater China region. All-time revenue record for India. The iPhone up about 6.5% on an annual basis, and expecting the phone to grow double digits annually in the holiday period. So for the most part, a lot to like.
Mark, I think Bloomberg Intelligence is also expecting these iPhone supply issues to ease. Any indication of when that might come to pass?
I would assume that they're going to ease in the coming weeks if Apple's expecting double-digit growth in this holiday quarter. Obviously, that ends at the end of December. So, they're probably estimating this based on how many people have pre-ordered the phone and ordered the phone online internally and via the carriers. And they're going to start marking those sales when they're able to ship, and they have a good idea of when that's going to be. So I would imagine in the next few weeks or so. I've already seen it ease up quite a bit.
What would you be on the watch out for the future trajectory of not only Apple's business, but also just the stock rally that we've seen?
Yeah, I mean, they're doing incredibly well. I think the stock is going to rally if they somehow beat that $140 billion number when they report earnings at the end of January and early February. You're going to start to see them try to turn this thing around in terms of AI in the spring with the launch of new home devices and the new Shery. So in the short term, a lot to like when it comes to Apple. In the long term, there's a lot of risk. Obviously, you're seeing a device pivot, some of these AI device form factors. The big question is Apple going to be able to jump on that bandwagon, or are these form factors going to be successful? You've seen Apple struggle immensely to enter major new product categories as of late. Obviously, they were not able to get automotive working. They canceled the car in February of 2024. And the Vision Pro has been a complete commercial failure. They're trying to pivot to the enterprise now. Will the home stuff be successful? I don't think so. I think that Amazon and Google have cornered the market. But as long as the iPhone is humming and services are selling well, I guess it really doesn't matter.
Consumer Tech Managing Editor Mark Gurman there with the latest on Apple. We continue to watch the latest here at the APEC Leader Summit that gets underway today. It's a 2-day of gatherings. We had seen, of course, the likes of Prime Minister Albanese of Australia already coming in, shaking hands with President Lee Jae-myung. We had the IMF Managing Director Kristalina Georgieva as well. We are expecting that family photo to take place anytime now. The optimism might be high because of all of those trade agreements we've seen out of South Korea. More ahead. This is Bloomberg.
Now, following on from Apple results, we'll be checking the Chinese and Taiwanese suppliers when trading begins. For the moment, this is the setup we are having from the South Korean Apple suppliers, LG Display, LG Innotek, among those that are really outperforming in the session today. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.